Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 8th of November, 2018. Thanks for joining me yet again. It is FOMC day. Today, we're expecting the FOMC to announce its outlook and rate decision. The decision is expected to come out at 2 p.m. Eastern. That'll be about 7 p.m. GMT. The expectation is for interest rates not to be moved this time, but of course we want to know. What the discussion was about. We're going to look for what words they use to describe their current position. So that's what's likely to drive most of today. Anyway, thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to just say a quick word at the end of this about just being a professional trader, what some of that may entail. But for now, we're looking at the sentiment across the board, and it looks like a slight off on risk. The market is pricing in a little bit of a retraction on risk. So it's not really a concern or anything. But overall, the S&P is currently trading down 12 points from settlement at 28.05 even. And so the leader today is the U.S. dollar. The U.S. dollar showing strength, up 21.5 cents or 0.22%. The bonds are up 5 ticks. Everything else seems to be down, unless you're into soybeans and corn. Everything else seems to be down. The Nasdaq's off 39.5 points or 0.55%. It looks to me from the overnight stance, that it looks to me like we have kind of stuck our neck out a little bit too far yesterday, squeezing those shorts and those hedges, and so we're taking a little bit of a repose today. So that's the overall sentiment. As far as what we're looking for today. Again, the FOMC at 2 p.m. Eastern. We do have some ECB speakers. We're looking for ECB Speaker Kerr in about 10 minutes. And at 10:20, we're looking for Draghi at the House of Representatives in Dublin. Not sure what that's all about, but nothing else but the FOMC remaining. We did get initial jobless claims and so on. I'm not going to go over the numbers that have already come out because there are a billion calendars out there where you can see that. If you need a calendar recommendation, just drop me a note on Twitter or futurestrader71.com/contact or convergenttrading.com/contact, whichever one you like. Let's take a look at what we expected yesterday versus what we got in pursuit of a persistent routine. Here's so in our review segment yesterday, if you follow the green, we're all following the green when we trade. We're looking for a gap to remain open, which it did. We're looking for impulses to the upside, which we got, right? We're looking for at least a test of 2,800, which we got, and plus another 17.5 points or so. So scenario 1 was on point yesterday. Scenario 2 did not show up at all. Here's what things looked like. I'm going to go to the Renko chart, to the trigger chart, just because the rotations have kind of collapsed. Also, the VIX is collapsing a little bit as we push higher. So we open in this open auction. Really, the opening swing should be expanded to 27.8775, which is a beautiful area for stock zone now. 27.87 27.8775 and 27.7675. So it looked like we were becoming responsive yesterday after testing up. We hit 87.75. We saw a little bit of a setup up there, and then we're looking for it to rotate. We're looking for it to rotate down and continue down per scenario too. It looked responsive until this bad boy showed up right here. And we ended up with a really decent rotation, 27.76 to 27.92, with a small pullback in between, breaking up those two the two impulses and extending the range up. So we have range extension up. We push into the 93 even area, pull back, try to pull back into the IB. We just cannot get to the mid. The mid is this dark blue, and VWAP is the cyan. And you can see how these things are moving together throughout the session. We just can't pull back to it. I found this is, as I've said since I came online and started speaking publicly, 2008, I've said that we are these kinds of days where it just trends up, trends are not my strength. So days like this, knowing myself, there's a tendency for me to not be able to, or not choose to, the abilities there is choice really, get on the long side. Although there were some really good opportunities yesterday, there's some clear push-pull continuation type moves. For example, right here, we have a bit of a triple top. We break through, we pull back right to that, like that, continue higher, and then we have this local double top, pull back right to it, continue higher, right? We have this little top, push right through it, pull back, like that. So it was kind of orderly. So it was a little bit easier to kind of see where it wants to go yesterday. But in general, these trend days up, just not my cup of tea. I tend to want to fade, and I need, my approach is to kind of oppress the instinct to always want to fade it, leaning on daily range stats and other projections and things like that. So not my style, but yesterday we did leave behind some single prints, some clear low volume nodes. The overnight low is right at the key low volume node off the open to value area, is meaningless today or yesterday. Not interested in value at all. We have some areas that are likely to be retested with a really strong range. I mean, we closed up yesterday, close to close on the ES. We put up plus 57.5 points close to close. And the range yesterday was approximately 43 points. Really good numbers, really strong numbers with good volume. 1.35 million versus 1.1 or so in the much bigger picture. That's pretty good volume, pretty good participation. The delta was very interesting yesterday. It tended to move with price, so we had good support on the lifting. But then you look at some areas where we have a good push, a minor pullback, and the delta just gets crushed and goes negative. And then just sits at the zero line. The equivalent zero line is the open in price. The zero line in delta is the open in price. And you can see price has a really big delta between the open and the high, whereas the volume delta is very, very small. So as this thing is pushing, it seems to be wanting to get sold as a potential hedge or whatever. We did not see this strong kind of buzzing higher type of delta move with price. So interesting action there. I'm looking for some of yesterday's gains to balance out. I'm looking for 27.93 at some point. So that's what happened yesterday. Here's another view of it. This is the composite. Okay. So as we extend the composite out, I'm including Monday's action or Tuesday's action in this micro composite that we left behind with a point of control 27.22, and now we have a break and run, an initiative run. I was looking for, and I talked about this a little bit yesterday. Actually, I don't really know if I talked about this here or Convergence chat room or audio updates there, but I was really looking for 28.19 and a quarter, 28.20. That's the next stock zone up. Stopped just short. It ran out of steam and also ran out of time yesterday. So you could see that we're really making a pullback and taking back a lot of the territory that was gained by the sellers in October. And the way it's trading, it's doing so in spurts. The pushes are in spurts, almost like a pullback to find more buyers, and then the buyers just ram right through the prior high, almost in a stop run fashion. We could see that very clearly on Bookmap. You could see that it's really just almost a stop run on the way up, crushing the shorts. This is why I'm saying that it seems to be just wiping out the hedges on the way up. So that's that. The overnight session was just a drift through the Asian segment, and then the Europeans came in, retested the close from yesterday, and then from there it's all selling. We have a double distribution profile. Boy, that's a terrible color for that value area, don't you think? It's almost the same color as the background. It's awful. Let's flip that. Let's choose something a little more obvious. So we'll do the background as gray. I never noticed that before. So the blue is the value area. So yesterday, or the overnight session, leaves us with this really pretty low volume node. By the way, yesterday, for those of you who were in attendance, I talked about this 27.7450 being the key target on the election results, and that was the key trade, at least the key trade setup for me overnight, 27.74 back to 27.57, I believe. And then I shut off around 9:30. And then the market pushed through. And what I talked about yesterday is look out for this 27.74. This is the key over underline. You could see it retested multiple times here. And we go right to it on the open. We push up, we sell off, and then the responsive selling goes to where? 27.74 and a quarter, and then off to the races it goes. This kind of similar event is occurring right in here. I see day time frame traders quite active and in control early in the auction, often these days. But this 2809 area is now behaving the same way. We have quite a bit of consolidation down here. The point of control is likely to shift down to the lower distribution. But overall, the action on the overnight is looking kind of bearish. So we'll see what happens on the open. But to me, this looks like it's a market that is likely to advertise prices lower to entice more buying potentially. I mean, it pushed almost to 2,800. Again, the low volume node here pushed almost to 2,800, and I'm looking for a test to that in the overnight session. The century figure tends to be a big magnet, and I don't see why today's session is going to be any different. The gray bands that you see here, I know seems like there are a lot of them because the range was very wide yesterday, but the gray bands are my stock zone areas. And those are the areas I'm looking to take action in based on a pre-planned basis. And then, of course, I take action on levels that are market generated when the market opens and generates those levels. Things like IBs, mids, low volume nodes, things like that. But the pre-planned trades are going to occur around these gray bands. Remember, my time frame is a day trader. I'm looking for a couple minutes to a couple of hours tops on these trades. I'm looking for rotations. I'm not looking to pick tops or bottoms or catch big swings. So that you understand what my time frame is. This morning, I'm looking for an open auction. I'm looking to attempt to go higher. I'm looking for resistance in the 2808 and potentially 11 area. I'm looking for an impulse down through the overnight low, the 2800, and a push into this 2793.50. I'm looking for it to consolidate in this area, pull back a little bit lower, and then we get the FOMC. It's quite a bit of action before the FOMC occurs. And then I'm looking for the higher probability is higher. And then, of course, it can always go lower because I don't know what the FOMC will announce. If I did, I wouldn't be talking here. I would be putting on a huge position. It's a good circle. That's the primary scenario. I'm looking for it to drift up, impulse down, consolidate. I'm looking for the tests of 2800 and 2793.50, and then potentially on an extended basis 2787 before the market responds. And if it does, if the FOMC happens to come in before those levers are touched, then I'm looking to trade the third wave. So we have our first push, all the computers, algos, robots kick in, and then we have a pullback, and I'm looking to trade the third move in the direction of the third move, and these bands become my targets. And it's not inconceivable for to push through and start filling the gap after the FOMC if the market doesn't like what it hears. Again, I'm not an analyst. I'm just responding to the action. Secondary open auction that continues to drift down, takes out the overnight low or close to the overnight low, push into 93.50, potentially consolidate, look to push back up to 28.11, close yesterday's close. We have a trend day up. We're looking for a push of yesterday's high. The point of control is near highs, and we're looking for this to continue to move higher into the 20 area, consolidate, and then look for FOMC to do what it's got to do. That's scenario 2. Just remember, much of what's going to happen today is going to occur in about the first hour and a half of trading. After that, it's usually the business is done early, and usually everybody waits around before the FOMC kicks in, before they start revaluing and repositioning. The third and fourth scenario are an open test drive down and an open test drive up on scenario 4. So I'm looking for the market to actually push lower and create a balanced day based on yesterday's action and the fact that we have these two gaps up. We're getting up here pretty fast, but it's not up to me to judge how fast that is. One last thing I wanted to talk about, just being a professional trader. Just 2 minutes. What is a professional trader? The thing about professional trading is not that you come in and make money every day. Nobody really, I've had streaks, verifiable streaks of 2-3 months of not a single down day. Many people have. And that doesn't make me a professional trader. Being a professional trader is all about your plan, your execution, your discipline, and your conduct. And that includes not beating down someone else's approach, not going on and making fun of it, not being closed-minded. I wouldn't call myself a professional if I wasn't open to any and all ideas. I evaluate everything I hear. I'm in contact with a ton of people. I feel grateful for that. Many people have had an influence on how I trade. In fact, everything that I've learned since I started came from other people. I mean, I didn't invent anything. I fell into volume profile just because I was trading on a platform that had volume shown per price on the side of the ladder, and I noticed certain behaviors before I started to plot it on CQG integrated client and all that. But what makes me a professional, I believe, is the fact that I come in, I do the same thing every day, been doing the same thing since 2005, and I've been trading since around late 2000. And I'm not gonna beat someone else down, because I disagree with their method. So good luck today. Just remember, being a professional is not about doing this, quitting your job and doing this full time and wasting your time. It's about all those pieces. Being a professional involves your discipline, your plan, your execution, your risk management, your mindset, big piece. Your mindset, awareness of who you are, and keeping an open mind to whatever the market hands to you and whatever everybody else is doing. Good luck.